The Russian invasion of Ukraine has the potential to rock the U.S. housing market. Predicting the housing market is always tricky business, but the Russian invasion of Ukraine has thrown a monkey wrench into housing experts' forecasts, many of which had just very recently revised their predictions to say they are looking at another very bullish seller's market here in 2022. Well, what does that mean for you, a typical buyer or seller of residential real estate? If there's one thing that economic markets hate, it is uncertainty. The Russian invasion is still unfolding in front of the world's eyes, and there are many factors that none of us know. Will other countries become involved in the conflict? How long will this war last? What will the ripple effects be on the global economy? Is the already strapped supply chain going to see further disruptions? Is the invasion of Ukraine going to create even higher inflation here in the U.S.? Inflation in the U.S. is up 7.5% over January of 2021, and it is a topic of conversation at grocery stores and gas stations everywhere. Americans are feeling the pressure of rising costs for goods and services. Previously, the Fed had announced a plan for a series of rate hikes beginning in mid-March to increase the cost of borrowing money in order to moderate the economy and slow down inflation. But traditionally, the Fed does not attempt to put the brakes on the economy during wartime. However, the Fed has publicly indicated that they are not going to postpone their rate hikes. Rather, at best, they might only slow the pace of the rate increases. According to a Wall Street Journal article that came out just today, Federal Chairman Jerome Powell said the near-term effects on the U.S. economy of the invasion of Ukraine, the ongoing war, the sanctions, and of the events to come remain highly uncertain. Powell said that he would propose a 0.25% rate hike at the central bank's meeting in 2 weeks. According to this same article in the Wall Street Journal, most Fed officials have indicated that they would prefer to begin raising their benchmark rate in March by a 0.25 percentage point, the size of all Fed rate increases since their last half-point move in the year 2000. However, a few officials have hinted over the past week that they would be open to an even larger increase this month. Powell has begun to even lay the groundwork for the possibility of larger than anticipated increases this summer by a 0.5 percentage point increment if inflation does not diminish soon enough. Rising interest rates will likely put additional pressure on homebuyers who are already struggling in the home buying process because of historically low housing inventory, and skyrocketing prices. While the market was incredibly tough for buyers last year in terms of competition and low housing inventory, at least the interest rates were low, which increased buyers' purchasing power. Will this extra squeeze on buyers push enough of them out of the market to relieve the competition between those that remain and put the brakes on prices that sellers are asking? Well, that is really a $1 million question, isn't it? I don't think it will. Buyer demand is so high right now and inventory is so low that we would either need to see a massive reduction in the number of people looking to buy a house or a huge increase in housing inventory. And housing inventory is an issue that has been plaguing the U.S. for years, and it took a steep downward plunge into even less inventory since the start of the pandemic. The crisis in Ukraine is likely to only worsen that problem if supply chain issues are further disrupted, which would negatively impact the ability of builders to pump out those new construction houses. And if global uncertainty causes nervous sellers to put their home selling plans on hold during this time of year here where we normally see the highest number of houses come to market, that is not going to help our inventory problems. Will the uncertainty over Ukraine make buyers nervous enough to push them to put their plans on hold? Well, in the past, housing experts would have probably said yes, but They also thought the pandemic was going to tank the US real estate market, and instead it pushed buyers into an absolute frenzy to find their own place to call home. While the type of uncertainty that we're facing now is different, I'm not convinced that it will stop buyers from wanting their own safe place to hide from the craziness out there in the world. Coupled with the news that interest rates are projected to rise throughout the year, of course, real estate markets are highly localized, so the best way to make an educated decision is to talk to a local, trusted, and knowledgeable realtor where you live. Here in the greater Iowa City area, as we move into the spring, we are seeing very low inventory. Sellers are demanding a hefty jump over last year's already steep prices, and a lot of competition between buyers showing up as multiple offers and terms that are aggressively geared to be attractive to sellers. It is a difficult market for buyers any which way you slice it. The winners and the losers shake out, and it has a lot to do with the skill and the savviness of the agents writing the offers and the cash reserves of those buyers. If there is one piece of advice that all buyers really need to take to heart right now, is that it is so important for you to have the savings available to go over list price and back it up with proof of funds. Offer an appraisal gap guarantee and back it up with proof of funds, or have cash on hand to manage some of those household repairs without having to ask the sellers to do it. The only thing that is certain right now is that the effects of the Russian invasion on Ukraine on the US housing market, the effects are uncertain. Make peace with that and weigh it against chronic low inventory and the predicted rising interest rates, and then just make the best decision for you and your situation. But don't hold your breath waiting for the market to crash. The way I see it playing out is somewhere in between another bullish seller's market here in 2022 to a slightly softened housing market where appreciation slows down, but not to the point of decreasing prices, at least not here in the greater Iowa City's market. If you are watching this video and you live someplace else, your mileage may vary. And again, that's why it's important for you to talk to your local real estate expert. Hey, it's been fun, and I'll catch you later.